Now, the property sector across East Africa is one of the fastest growing in sub-Saharan Africa. Just as a background to our conversation today, what are the major highlights of the property sector in this part of the continent, given that within the past few years we've begun to see a stagnation in terms of price, leading to a sort of a plateau, though most analysts are optimistic that this is a sector to watch. What's your analysis of that?
The Kenyan property market and sector in general over the last 10 years has experienced enormous growth. Over the last 3 years, a lot has happened, specifically in the residential space of the property market. And what has fueled that growth is because we still have a huge deficit of demand versus supply. So we are still experiencing a demand-supply mismatch. For example, the country requires at least 150 units, and projects are able to only to deliver 30,000 units. So that has been a bigger part of the momentum. But over the last 3 years, there's been a bit of a slowdown and some fatigue, but specifically in the high-end property market.
Now, there is a symbiotic relationship between real estate and pension funds, and most analysts agree that engaging pension funds more into the property sector can bring stability to either side. In what ways are pension funds currently investing in the property sector, and how are both sides benefiting from that equation?
You're right. There's always been a symbiotic relationship between the pension industry and the property market in Kenya for over a long time, and there's a similar relationship world over. Specifically in Kenya, the bigger pension funds and the national pension fund of the country have been huge property developers. You'll be surprised that the huge office blocks in major towns, specifically Nairobi, are owned mostly by pension funds, larger pension funds, and a few slightly by large life insurance companies. The pension sector in Kenya is divided into two. We have the national pension, and we have what we call occupation or company-related pension funds, which currently total up to around 220 billion Kenyan shillings. And then we have the national pension fund, which is called the NSSF, which has assets around 80 billion in total. That institution has done a lot in the property sector. It's done a lot of residential and office block development, but over the last 5 years, they've stopped new developments, and they've been, over the last 10 years again, been selling their property assets. So the lack of new investment in property, from a pension perspective, has slowed down. Now the other private pension funds, over the last 5 years, have somehow caught up and started investing in property.
Now, you've talked about private pension funds leading the way in terms of investment into the private sector, though, as you correctly mentioned, that particular asset class is overlooked, in view of bonds and equities. What are some of the challenges that these funds are currently facing in terms of engaging more into property development?
One of the obvious ones has been there's been dominance and of other asset classes, and these are the usual equities or shares, listed equities, and secondly, fixed income securities, government bonds and related interest-bearing assets. Those two asset classes have been dominant assets of choice for pension funds, and somehow property has been neglected by private pension funds. So that dominance has been a problem. And then the second problem has been there's never been strong professional advice towards private pension funds to invest in property. And then the other challenge has also been we've not had in this country property investment vehicles, collective investment vehicles to allow pension funds to come together and invest in property, especially the smaller pension funds. So that again has inhibited pooling of funds by smaller pension funds to invest in property.
Now, keeping in mind the challenges that you have talked about, just how attractive is this particular market to pension funds who have for the last many years preferred other asset classes that you mentioned earlier? Why should pension funds be looking at the real estate sector as part of diversifying their portfolios?
The property returns sometimes will never be aggressive to comparative asset classes. But property has one feature which makes it an ideal asset class for pension funds. It's a growth asset. And in all the assets available for pension funds, there are only two growth assets. That is property and equity investments. And those are the only growth assets which are able to combat inflation. The other fixed income related assets give consistent income, some capital gains, but they have a challenge in combating inflation. So property fills that gap in two ways. One, in good rental yields. The rental yields actually sometimes tend to mimic returns from the fixed income or interest-bearing securities. The other thing why property is a good asset class for a pension fund is because property tends to smoothen out the volatility in some of the asset classes. For example, equities have tended to be volatile over the short term, but over the long term have tended to be growth good assets for a pension fund. So during those days of volatility, the stability of property returns as an asset class tends to smoothen out that volatility.
Now, despite the hurdles, there are several success stories across East Africa of pension funds that have heavily invested in the real estate sector, and the return on investment has been above impressive. Perhaps you can let us in on some of these success stories.
Starting with the National Pension Fund of Kenya itself, the NSSF, has done some very good property investments. They have put up some very nice office blocks, which over the last 15 years have consistently provided above average returns and been good to their members. And the same story cuts across East Africa, because you realize national pension funds of any country continue to be a dominant property developer and investor in any economies. And all the NSSFs of Kenya, Uganda, Tanzania, and Rwanda specifically have success stories. All the high quality, high yielding office blocks in Nairobi, Kampala, and Kigali, and also Dar es Salaam, are owned by the national pension funds.